The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, folks, welcome to the show today. We're going to take a look at, first of all, with gold, because we hit some type of a major bottom yesterday. So far, we've rallied $34, which is the harmonic number in gold. This is the number that repeats over and over again. One half of that is $17, so you'll notice that you'll see that move quite a bit also. But we did go exactly $34. That means if we get above the 1177 level, we've got a chance to go a good deal higher. That would take us up at least another $34 from the low, which would take us up into that 1185 area. So that's what we'll be watching in the gold market. However, I think the best thing to start with today, given the fact that what the Fed did, and this is about commodities, we should look at the biggest commodity of all. If you'll give me 1 second here, if I can find it. Where did it go? Just 1 second. I've got it here somewhere. There it is. We want to take a look at the note market, and because that's the biggest of all the commodity markets that we trade. It does more volume than anybody else. But if we take a look at this, you'll notice, and dollar volume, there's nothing even come close to it. It's hundreds and hundreds of times bigger than the stock indexes, so we'll see that. But you'll notice after the bottom that we made back on March the 6th, which was the anniversary date of the low in the market for the stock market back in 2009, we exploded off of that level. We've been up 10 days in a row as of yesterday. We came within 4 ticks of the exact high of the 61% retracement. What we did is we went and we matched the high that we made back on February 26th, and then we've sold off a little bit. I believe this market is poised to go down a great deal, but the real acceleration to the downside will not happen until this low of March 6th was taken out. That's another 2.5 points from where we are in bonds. That would mean the yields would have to spike up above 2% quite a bit in order to see the market move. But that's the way it looks to me. I really enjoyed Basil's presentation about the skyscrapers. I have a marginal fear of heights. That's the understatement of the year. But some of these buildings are beyond belief. That one in Dubai with the tennis court on top is something to absolutely. It's like one of the wonders of the world, in my opinion. The one in Malaysia, the Penafores building, is really cool too. But that one in Dubai is really amazing. I haven't seen the one in Beijing, but I've seen the one in Shanghai, and that's a very incredible structure too. These are all indicative of socioeconomic things that will cause this thing to go down, but when that is, it'll be soon, I believe. And from what we heard from our guest, Bill Ehrman, on Wednesday, he has one of the largest cluster of dates coming up in April that he's ever seen. And I've been doing this business a long time, and frankly, I've only met one person at his level to tell what markets are doing. That's another gentleman in London, and believe me, Bill has some really interesting things, all based on the geometry of the market and pi, and also phi, which is the 1.618. So these are the things that we're keeping our eye on. Mid-April is towards the end of April is what we're looking at for a huge date. We've got a big date today. And tomorrow we have a new moon, we have a solar eclipse, we have Apple being added to the Dow, we have Visa splitting, and we have the solar eclipse, I believe. And then tomorrow we have springtime, the spring equinox, so that'll be an important indicator. of a pretty good trend change in some of these things. And I believe after this strong rally we've had in bonds, we'll be getting ready to, you know, move to the downside. That's the way it appears to me. Stocks still have held up relatively well. They couldn't make the 61% retracement yesterday on the downside before the market was influenced by Miss Yellen and her colleagues. And of course, they came out with their usual I don't know exactly what they say, but whatever it is, the market anticipates it as being bullish, and we had an explosive move to the upside. So whether that's going to continue or not, you know, we'll have to wait and see. But this is what we want to be keeping an eye on, some of these things with the bonds and stocks, because it's my personal opinion that what the Fed is doing is just not going to work. It hasn't worked over history, and that goes over a very, very long period of time. And but you know, we'll wait and see. You know, I'm at the stage in my career now that maybe this time is different. One never really knows, so we'll have to wait and see how this unfolds. Now, I wanted to show you the Treasury bond market, because that's also a large market, not as large as the note, but it's had you know, the 3 drive to a top pattern that we had way back in January, and now what we've done is we've rallied back to almost 61% retracement. We haven't quite made it yet. We got to 64.09, and the number means to get to 164.09 or 29 to make it complete. So we still have a potential for doing that, but we're up 10 days in a row. We haven't even had a down day for the last 10 days. So this market is still, you know, very, very overbought, and we could easily, you know, back off from this area to see if that is going to be the case. Yesterday, we had a $3 a barrel rally in crude oil. I'll put this up here, and we'll take a look at this here. We'll just look at it on the shorter term chart, because you can see that it really follows the number sequences really well. And we'll put that up here. Give me a second, and we will get this in here, and then you'll be able to see it pretty well. Oh, there we go. Okay, because we went right down to the 786 retracement yesterday in oil, and then for some reason, you know, the market rallied $3 a barrel. And what oil has to do with any of this stuff, I don't know. I guess it's a risk-off, risk-on parameter, whatever they have to look at, but that's what happened. We went from 42.20, you know, to 45.20 in a matter of about 3.5 hours. And then, of course, we came all the way back down another $2.50 a barrel down to the 42.80 level. So these markets are very active, and this is exactly what you like to see, you know, during this stage in the cycle. And I believe what Basil talked about, folks, we should really pay attention to this, because Basil Chapman has kept you on the right side of this darn market nearly the whole way. And when he starts getting nervous and starts talking about socioeconomic things like the skyscrapers and some of the other things, the automobiles and some of the other things that he's seeing that in his charts also. And so you ought to pay attention to that, because when that guy comes out and becomes bearish, you better pay attention to it, because his technical work, you know, stands up to really strong scrutiny, and you don't want to stand in front of it. So just keep that in mind for what it's worth. Now, we've had a pretty monstrous rally in the euro. Monstrous rally yesterday would be the understatement of the year, because we did rally well over. Let's just get this up on the 240-minute, and you'll see that we rallied. Let's just put the 618 in here so we can see it here, and you'll be able to see how close we came to the exact number, because we missed it by just a hair's breadth. We missed it by about 8 or 9 pips on the 61% retracement. And then we'll take a look at that right here. And Basil, you don't need to blush, buddy. Your stuff is good. Believe me, I got a lot of experience doing this, and I talked to a lot of people over the years. And you're in a class all by yourself, my friend. Don't let anybody talk you out of it. So anyway, this is the euro. We missed the 61% retracement from the high back in February by just about 5 pips. That last part of that move happened in such dramatic fashion. I want to show you how quickly these Forex markets can move, because the market moved from 106 to 110. That's $4,000 in a matter of 1 hour. And this was after, well, the first part of it was during the Fed, but the last 250 pips was after Janet Yellen had got finished trading, speaking. Now, I talked to a friend of mine who owns a Forex bank, and he said the only reason that usually happens in Forex is that there's a huge order to buy and very little selling, and that's usually because it's late in the day. A lot of London is basically, they're shut down, and so we have a situation where we have less sellers coming into the market and a huge number of buyers. And what they do is they start bidding the market up, and when they get it above 110, that triggers some type of a red light for somebody, and then there's nothing but selling, and the market drops from 110 down to 108. So we have a swing that goes from 106 all the way up to 110, which is $4,000, and then down again to $6,000. And what we've done today is we've had another move all the way back down from 110 all the way back down to the 106 level. So we're having that's a $20,000 swing in the euro excuse me, in a matter of 12 hours. This is extreme volatility. So if you're not prepared for it, don't trade it. But you want to really be prepared with these things because they have the tendency to really scare people. One other thing that Basil mentioned that I have a really strong opinion about, it might be wrong, but I believe these ETFs that are out here are weapons of mass destruction. I don't know who the other sides of these trades are, the counterparty risk on these things, because they fabricate these things out of thin air. And if something happens, if these goes bad, I mean, who's going to pick up the pieces? I mean, there's so many of them out there. This would make long-term capital look like a relatively risk-free investment. If something goes wrong with these ETFs. I don't understand the mechanisms, but I go through the rationale of how they're created and stuff, and I'm just curious about it because some of these ETFs, they don't look like the vehicle that they're underlying, and I don't quite understand that either. So maybe I guess I'm being a what do you call it? I can't even think of the name. Not a spoiled sport, but I'm just a little nervous about those things because they come up all the time. They have one now that is a the German stock market minus the euro. Boy, if that's not one out of creativity, I don't know what it is. But that's something that should be interesting to look at. So we'll see what happens. So we've got to take a break here to pay a few bills, and we'll be back right after these few words. We got gold rallying a little bit, and silver is actually doing better than gold.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted into Tiger TV a pattern chart. This is a graph from one of my students. He built me. Well, not built, but he made me a beautiful marble clock, all etched in marble, just like a sculpture. He's a sculptor, but he sculptured all of these little patterns, and then he had it done into a clock. This was the original format that he started with, and he put all the little patterns around it, showing the ratios, and it's really an interesting piece. Feel free to use it if you like, but it does a really good job of describing, the type of things that we do. If you'll notice at pattern 12, now the reason why they were called 12 all the way through is that was what the clock, 1, 2, 3, 4, 5. He was making a beautiful clock for me, and it turned out that it's one of my prized possessions. I have it here hanging on the wall. Even when it's broken, it's right twice a day. But you'll notice all the patterns that are there, from the butterfly pattern at the top, and the Gartley patterns are, at number 3, and then again at number 4 and stuff. So these are the ones. But if you'll notice, all of them are related to triangles. Everything is related to triangles, and that's really all the market's ever doing. It's going up and down. And what you're trying to do is to try to find a support or resistance point based on these ratios when these patterns complete. The better patterns are the butterflies and the Gartleys and the ABCDs, because those have multiple numbers coming together. You can see more ratios. That gives you a higher probability of working. Your pattern 7 and pattern 6 and pattern 8 and pattern 5, these are retracement patterns where the market retraces back to a 61 or a 786 retracement level and then proceeds to the downside. So the ones that are the best to do is the ones where you have multiple patterns coming together. That's why the butterfly, the 3-drive to a top, and the Gartleys are by far the very best. In the middle of the clock, you'll notice that the ratios that I look at are 618 and 786. These are contracting ratios. And the bottom are the 1.27 and 1.618. Those are expanding ratios. And of course, in the middle is 1, which is equilibrium. And equilibrium is very important because all markets repeat. It doesn't make any difference at what time frame you're looking at. You're going to see that repetition coming over and over again. There was a interesting article this week or today in Bloomberg. I know it was Bloomberg about Ray Dalio's Bridgewater Associates and the fact that they were doing algorithmic trading and stuff like that. And the comment was, these are going to change the way the markets move forever. And that is not going to be the case, folks. I don't care how many people are out there. They all go through these same sequence of numbers. We've seen this over and over again, and it's not going to change at all. We saw this during the tech bubble in 2000. We saw it in 2007. We saw the bottom at 2008. Nothing is going to change because these are based on fear and greed. And, you know, when markets are going up, there's no fear. And when markets are going down, there is a lot of fear. So this is why it works that way. But the patterns are still going to work. They'll expand, of course, but they're not going to change. I've looked at this. Data really became available, what stocks were doing about 10 years after the Civil War. That was 1875. We started getting a little bit of data. And, of course, now we have big data. We have data everywhere. And not only that, we have Big Brother looking at all the data through all the websites and the social networking and things that they have. I don't understand why people use social networking. I can see where parents and children and grandchildren showing the pictures doing it, but and teenagers, of course, with their telling. But and doing business over those social networking things scares me to death because of the way that data is manipulated and stolen. Because, you know, if you go onto Google or Travelocity, if you go onto Travelocity and plan a trip to Hong Kong, within 2 or 3 hours, you're getting 3 or 4 different requests for insurance going to Hong Kong, special rates on hotels in Hong Kong, trips to China leaving from Hong Kong. I mean, they have them from everywhere. So, I mean, every time you send something out, they know exactly what you're thinking. They know, you know, pretty much the type of seat that you're buying, which tells them a little bit more about your income level and what your stratus happens to be. So, you know, that's the main thing of what we're looking at. Now, the other thing that I wanted to bring into your attention here is we want to look at the other part of this, because there's other charts that were associated with this that turn out to be really nice. And what I'll do is I'll make this available at TFNN. So if you want these patterns, we can transfer them over to you through TFNN. That shouldn't be a problem. So we're going to take a little break here now for our halftime break, and then we'll be back right after the break to talk about some grains.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Folks, we've got a special guest coming on with us right now. Norman Winsky of Astro Trends is going to talk to us about a little bit about J.P. Morgan and Evangeline Adams, who happen to be Morgan's professional astrologer. Norman, are you there?
Yes, sir. You can call me Norm. How about if I call you Larry? Is that good?
You can call me anything but late for dinner.
Okay, me too.
Hey, listen, I have a little problem.
Is there a way to have the microphone closer or something? You're a little faint.
I'm always a little faint, but that's the best I can do.
Okay.
Turn up your hearing aid. Put new batteries in it.
All right.
When we get old, we have to do that, Norman. You know that.
Yes, sir. Hey,
listen, what we're going to do now is I'd like for you to spend a little time talking a little bit about J.P. Morgan and Evangeline Adams, how you got into astrology, and then I had a little technical difficulties with your charts, so I'm going to have you on next week if you're able to join us, maybe on Monday to come back on for a little bit. Would you be able to do that?
I can do that.
Okay, tell us a little bit about how you got started into it.
Today, though, yeah.
Well, let's just talk about how you got started into astrology and your background, how you had your seat at the, I think you were in the NASDAQ at the very beginning years, right, or the CBOE?
I was on the CBOE in the early years, yes.
Mm-hmm.
So
and how'd you get...
To answer your question, how I ended up studying astrology, I was a student at your
alma mater.
Not alumni. Your alma mater. There's the word I'm looking for. Your alma mater. Indiana State University in beautiful Terre Haute, Indiana. And I was kind of a year-round student. So summertime, I went out to the shopping mall there, and I, being a college student, didn't have a car, so I'd have to shuttle back and forth on a bus. And so one day I was just killing some time in a bookstore there at the shopping mall, waiting for my bus and looking around, and I see this book on astrology. And it turned out it was Linda Goodman's sun sign astrology or something like that. And I thought it was, excuse the expression, a crock, and so I picked it up and just looking for something to amuse myself. And I started flipping it through it, and I've always been a sort of a natural-born student of human nature and that sort of thing, and started looking through this actually, and said, "Gee, said to myself, this is kind of interesting." It was summertime. I'll take it back to my dorm there and try it out on my friends, So that's what I did. So I took it back to the dorm, tried it out on a few friends, and everybody's going, "Wow, this is pretty accurate." And so then I thought, wow, there's got to be more to this than one book. And so then I still got some more books, and I studied for about a year. And then the funny thing is, about a year later, I was back at that same bookstore again, rummaging around in there. I just happened to look down at near the floor there on an empty book, little book cubby, and there was just one book lying there, and it was all by itself, and it was Donald Bradley's stock market prediction, which they had marked down from $1 to 10 cents.
Wow.
So even a struggling college student like me could handle that, and so I picked that up, and I was already been studying the stock market since I was 15. So and so I saw that, and during my year of studying astrology, I thought, man, there's got to be, the market is all about psychology and things. There's got to be some way to tie the astrology with the markets. I wasn't quite sure how to go about doing that, and there it was. Bradley's book sort of got me started doing that. That was my first book I read on financial astrology, and that kind of got me rolling. And then I started investing in the market. I got, as soon as I turned 21, I could sign papers and things. I first, based on Bradley's principles there, he talked about forecasting the 41-month business cycle using Jupiter and Uranus. And so I used that and immediately recognized that one of the big markets that goes, in addition to the stock market, another market highly correlated with the 41 business cycle is copper. I grew up in this multi-generations of a scrap family, and so I grew up hearing about copper prices. So I went and checked that out, researched that back several decades, and found out that the copper worked really well with these planetary patterns. And so the very first stock I ever bought was Anaconda Copper. And back then, Anaconda had just had half the company stolen by the socialist government in Chile. And so I walked in there. I didn't even know that much about the company, other than that had been the largest copper mining company in the world. And so I wanted to participate when copper went up. And copper was very depressed, and Anaconda just lost half the company. It was kind of a disaster story for the Anaconda. And so I went into a brokerage office there in Terre Haute, and then asked to talk to a broker, and they go, "Oh, this is a disaster story, the Anaconda. Why would you want to invest in that?" And I told them. They thought that there was an Anaconda plant outside of Terre Haute.
That's right. It was a big employer there.
I worked there. I said, nope. I said, I'm doing this based on the stars, and they thought I was crazy, and checked my bank references and everything. I didn't know that. I found out later I became friends with the stockbrokers there. And so anyway, so I ended up buying copper. I think it was in the mid to high 50 cents then, like 55 cents or so. And that was during the Nixon years where we had the freezes, and and the U.S. copper prices were frozen. So anyway, so copper went from like 55 cents to within 18 months or so, went to all-time record high on the London Metal Exchange. I think it got to about $1.41. My Anaconda copper went from about 17 and change to about $29, and I had bought a couple thousand shares, and so that financed. Then I got more involved in doing stock investing, and so I was successful enough that things all converged toward the end of my college career there because I was studying economics and finance. And my senior finance class, I asked my prof. I was taking 2 different classes with the same prof, and I asked him if one was investments and one was financial intermediation. And I'd been doing some option trading. I'd gone to a seminar and learned about options. And so I asked him if I couldn't do like a 6-hour paper, which would cover both of those classes on the Chicago Board Options Exchange. And so that's what I did. So I went to took a trip to Chicago and rummaged around there at the exchange and got to meet some really big names there. The head of some of the founding people there. The head of the membership committee was a fellow by the name of Eddie O'Connor, who had been a
oh my God, I know Eddie. Yeah,
trade. What's that?
Yeah, O'Connor Grain. I remember him.
Absolutely, the O'Connor brothers, Eddie and Billy, right? So anyway, Eddie said, I said, well, how does one become a member here? And they sent me to Eddie, and he was chairman of the membership committee. And I said, well, how does one become a member here? And he told me. Then before we got all done, he said, son, you got any money? I said, well, I have a small inheritance. He said, well, why don't you put your name on this list here? You can get a seat. They're $40,000 in the open market, but you can buy them from the exchange for $25 if you get on this list. I said, okay. So that's how I ended up
wow.
ended up buying a seat.
Good.
You know? So then when I got done with school in the spring of 1975, I moved to Chicago and became a market maker. I was there 12 years on the floor. And I saw lots of wild and crazy stuff.
Yeah, I remember meeting you at the end of that time. I met you, I believe, in '86 or '87. Norman, as I recall, I mean, we've had lots of dinners and stuff together. But wasn't your uncle part of NASA or started NASA, something like that? For some reason,
my uncle on my mom's side, my mother's brother, he's from Terre Haute. He's the guy that got us to the moon.
Wow.
Yeah, he was first director of space flight program.
What was his name?
Abe Silverstein, Silverstein.
Wow. Okay, listen, I wanted to discuss it. We're going to come up to a break here in about 4 or 5 minutes, and then we'll keep you to the end of the hour. But if the folks want to reach you, it's www.astrotrends.com. Is that correct?
Yeah, but the best way to reach me is just email me or call me.
And what's the best way?
Go to the website there. All I have on there is contact information.
Oh, you can. So if you go to astrotrends.com, all your contact information will be there.
Astro-trend. Okay, www. astro-trend.com. But probably the easiest thing is just to call me at 239-594-3939. That's 239-594-3939. I'm in beautiful Naples, Florida. If you're overseas, you can also call me on Skype at norm.winsky. That's NORM.WINSKI. That's NORM.WINSKI on Skype. Or you can email me, norm@normwinsky.com.
Okay, now one other question that I have. We're going to have you on Monday to talk more about this, but do you see anything that's particularly exciting in the markets right now?
Well, we just got past some huge stuff, and the next big thing happening is obviously the solar eclipse. I had some pictures I sent to you about the eclipse there, Larry. We were not going to be able to put my charts or anything up on the
well, because
today.
I'm not able to, as you know, I'm technically inept, and I'm not able to put them into a file to put them one at a time. So I have to figure out how to do that. I tried to do that before, but I was unable to. That's what we'll do Monday. I'll have this all done by Monday so the folks can see some of your work, because you're not only being an astrologer, you happen to be an expert technician, and they can certainly see and understand the charts, and we really need to share that with them. So we'll have you back on Monday at the same time, but just give us an idea of what you're seeing right now, and what your outlook for this coming week might be in any particular market that you want to follow. It makes no difference. Just pick something that you like.
Well, the stock market, I think had a major, which you saw my letter there, and you saw that I was forecast. I do my letter, a month at a time, and so I send out all the forecasts, usually around the first of the month. And so, just for example, on the stock market there, for the big picture, I do a Bradley style forecast there where I draw a line in advance, try to map out the market in advance for the month, and so I had the based on that the market was going down there in the first few days of the month, would continue down until the middle of the month. Weekend of the 13th, we'll look for a big pivot, big change in trend for that weekend, and then that we should turn higher, and that's so far pretty much what we've done. I think on obviously yesterday, Fed fired, Fed sort of goosed the thing maybe a little too much yesterday, so I think it's going to be kind of whippy choppy, but with a overall upward bias. I don't see any huge rally coming up here into the end of the month. I do have a major long-term target on the S&P 500 of a 2138 area. That's based on some Fibonacci mathematics. And if you want, I can go through the mathematics, how I arrived at that. Would you like me to do that, Larry?
Yeah, what we'll do is we're going to come up to, we have to pay some bills here because of advertising and stuff. Let's do that when we come back from the, let's just start it. And when the break comes up, we'll just finish it up because I'm going to have you back on and we're going to do more of this on Monday. I've enjoyed looking at your letter. And, I respect your work you've done. I've known you for 35 years, so you've been around for a long time, which attests to your ability. So you do have something quite unique, and I think some folks that are interested in the astro harmonics. But let's get, before we go into the numbers, tell us a little bit about Morgan and Evangeline Adams. We'd had a couple of chats about that. You mind sharing the folks what you know?
Okay. Well, here's back in, let's see, after I moved to Chicago, about a year or so, I moved, when I moved to Chicago, I moved there kind of in a hurry from college to be on the CBOE there, and so I just kind of packed everything up real quick. And so one day, I got I knew this. I'd made a friend in Chicago who's a professional astrologer, and she had told me had mentioned to me that J.P. Morgan had this astrologer, Evangeline Adams. And I didn't know hardly anything about her, but other than what my friend had told me. And then, I had a pretty good year. I made a substantial amount of money. But so one day when I went home and went into in my apartment, I had like a spare bedroom. I turned into my sort of library den. And so I was rummaging through. I thought, it's been here a year or more than a year now, and I've hardly ever looked in this desk here. Wonder what's going on. I tried to open the drawer and could barely open the drawer because I had it stuffed so tightly. And so I finally got the drawer open, and here was this old newspaper I'd had from college. It was an astrological newspaper talking about, and it had one of the featured articles was by a astrologer, professional astrologer by the name of Margot Mason. Had a little bio on her that she owned. And just a few weeks before, we had talked about with my astrology friend that wouldn't it be great if Evangeline Adams, maybe she had some books or notes or something that she used to advise J.P. Morgan. It wouldn't be great if we could somehow find some kind of collected notes or books of hers.
Okay,
and so
Norman,
now I'm going through the library and I find this old newspaper. And
Norman, hold on here 1 second. We got to pay a few bills. Stay with us, and we'll be right back. Okay.
Okay.
Thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back with Norman Winsky of Astros Trends. Norman, are you still with us?
Yes, sir.
Okay, what we're going to do, we've got a couple of minutes here, about 4 or 5 minutes. Why don't you finish up with your, your story you were talking about of Angeline Adams, and then we'll have you again on Monday. How's that?
Sounds fine. Sounds great.
Okay, we're going to go to the end, so fire away.
All right, so to finish the story, so I had been talking to my astrology friend there in the Chicago area, and she told me about that J.P. Morgan had this astrologer of Angeline Adams, and I determined, sort of made up my mind that somehow, some way, we're going to try to find, track down her papers or whatever there might be left over, and so a couple of weeks later, I'm going through this desk of mine I hadn't looked in for a while, and found these old papers from my college days. I found an old astrological newspaper with a featured article by this Margot Mason, and they gave a little biographical information on her. And in the bio there, it said that she owned the library of Evangeline Adams. So now I'm on the trail, you know. So it's like it was like magic, you know, that I made up my mind that I was going to find this stuff, and now I got a major clue. So then we started, gave her town that she was in. She was in Longmont, Colorado, so we tried to track her down there in Longmont. We couldn't find her, but I don't know, somehow we called around, and somebody said, oh, well, her parents lived there, and they gave her parents' name, which was different than her name, and so we tracked down the parents, and the parents said, this is kind of in a way spooky story, in that everything kind of lined up at just the right time. It was like I was meant to get this collection. So we called the parents, and they said, they said, we're sorry to say that our daughter Margot passed away a year ago from cancer. And we've been in grieving for her for the past year, and we have had people contact us about the library, but we just weren't ready to do anything about it. And so I guess now that it's been a year, we're willing to talk to somebody. So had I called any earlier, it would have been a no-go. And if I called any later, probably somebody else would have called and gotten the library. So anyway, that's how I ended up with the library. And so, it's kind of a pretty... Oh, and in my pursuit of the Evangeline Adams Library, I had a friend who was running an astrological bookstore in the area, and she had somebody... we told her to be on the lookout for any links to the Evangeline Adams Library, and so she had a guy come into her shop and started chatting with him. He said, I have a major collection of astrology books. I'm a childhood friend of Ernest Grant, who was the founder of the American Federation of Astrologers, which in that day was the largest astrological organization. And so when he would get upset with the group, he would donate the books to keep the books himself. Otherwise, he'd donate the books to the AFA. And so she put me in touch with this guy. So I ended up buying another huge library. So I ended up in that short amount of period, I ended up with two huge collections of astrology books. I probably have one of the largest collections of astrology books in the United States. So that's sort of a little talk to tell you a little bit about Evangeline Adams. She was back in the 20s, she was a superstar. She had one of the first coast-to-coast radio programs in the United States. When the market got volatile in the late summer, early fall of 29, people got concerned about the market, and it's told in a book and later TV movie, The Day the Bubble Burst, how people lined up. She had an studio office in the upper floors of Carnegie Hall, and people lined up around the block to get in to see Evangeline Adams. She was a major star in her day. She had royal heads of state, as her clientele, and the major financiers and all those people as her clientele.
Hey, Norman, we're winding down now, buddy, so we're going to have you on Monday at the same time, okay?
Yes, sir.
All right, thanks for coming in. We really appreciate it.
In the meantime, feel free to contact me. I'll get you the notes for today's that we're going to do today.
Thank you very much, Norman.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.